Hello, everyone. Thanks so much for joining us today. I'm Sherry Fry, and with me today I have Nick McCoy and Kelsey Michael. Nick is from Whipstitch Capital, and Kelsey is with us here at Nielsen IQ. And we're really excited to share with you some of the things that we're seeing in terms of some of the major trends. But really, this is a roll your sleeves up and get into the data and really understand how you can use the data as you are preparing for investor meetings. So I'm going to give you a little bit of a preamble of what we're seeing in terms of the marketplace, but really the lion's share of the amazing content is going to come today from Nick and from Kelsey. We will have a couple things. We will be emailing out this presentation after the fact, so don't worry about that. That'll come into your email. And then the other piece is Kelsey's going to be sharing a QR code with you at the end of the presentation, so you will have access to log on and get the data, get some data and get started. I hate to start presentations out with a little bit of negativity, but the truth is, we are in an interesting time from a consumer perspective. We know that consumers are, really starting to struggle with, fuel costs and grocery costs. And, I'm going to share a few things that we're seeing in terms of some of the price increases, some of the challenges retailers are facing. But we also think that this is also an interesting area of opportunity, especially for emerging brands. So we wanted to give you this kind of stage that you're playing in, because we think it plays very nicely into how you might look at the data, how you might analyze the data, and where you can really, draft off of some of the great opportunities. So with that, again, keeping with a little bit of, some of the negative things that we're seeing, we are seeing that, the prices the CPG prices overall have continued to rise. This is one of the things that consumers are telling us that they're clearly struggling with. We know that a lot of this is driven, of course, by supply chain challenges. But this is, the price of food, the price of goods is really starting to impact consumers in their wallets. And the other interesting thing, that we are noticing is that the number of items that is being carried has starting to trend lower. And this is, of course, as you know, driven by a few things, right? It's driven by the supply chain challenges that we continue to have. There's been more retailer SKU rationalization. We've had major manufacturers who, have kind of said, like we're not going to focus as much on innovation and really kind of double down on our core items and what we're carrying. So the marketplace, there's kind of this, we think, a sweet spot for many of the emerging brands. Because when you look at some of the things like innovation, we're seeing product innovation down across the board. And we've been looking at this globally. What you're seeing here is just US information, but whether it's in food or non-alc or pet, we're just seeing a decline overall in product innovation. And this is really, really, we think, an important thing. We have tracked this. We track this from a Nielsen IQ standpoint over time, and we do see that when brands do innovate in the tough times, they actually do tend to win. They can increase their distribution points, increase their share overall, and those that don't innovate, obviously, tend to lose. And so this is, again, when you have kind of a negative, headwind here, there is some opportunities for emerging brands to really play a unique role and actually kind of a sweet spot. But the truth of the matter is, and a big part of why we wanted to talk about the data today is it can mean that it's easier to get on shelf, but the truth about retailers is the time to prove it out is shortening. And so the importance of data, the importance of understanding where your products make sense, what consumers you really are most relevant for, and understanding not just your sales, but what's the trial and what's the repeat. These are more critical than ever for emerging brands to really understand what's happening and really improve the overall partnerships that they have with retailers. And so again, this is why we really felt passionate about getting this data in front of you today and talking about how you can use data differently. One of the big things from a Nielsen IQ perspective that we're watching, when it comes to the economics, we've really been watching the fact that, the last few years has really identified that there's a polarized consumer, right? There's a lot of the haves and have-nots, but you can see that orange there in the middle. There's a lot of folks that are impacted, that really weren't impacted positive or negatively, but they've just become a little bit more cognizant of how they're spending their money. And so while we know that there's this increased attention on, where I spend my money, one of the big things that we found from a Nielsen IQ perspective is wellness is critical for everyone, every single one of these groups, whether you're a thriver, and you're kind of thinking a little bit more proactively, or whether you're on the struggling end of the aspect. And unfortunately, a lot of those consumers are frankly dealing with ailments. We've heard consistently from consumers that they really care about wellness. We've done a lot of research. In fact, we've got another webinar happening today on big brands versus small brands. So I just wanted to share one slide here with you on this, but we definitely are finding, that there's a great opportunity for smaller brands. More and more consumers are, recognizing that there's a relevance around specific attributes for, authenticity or personalization that they can find with small brands. And you can see some of the things that we're seeing in terms of the, we did this research and we looked at people that are really passionate about big brands, really passionate about small brands, and then there's some that are just kind of agnostic. But we did find these people that are very passionate about small brands. You can see they're looking for these small brands and they're looking for things like natural or healthy or environmentally friendly or sustainable, which is why I was telling Nick and Kelsey, I talk about wellness all the time. And I wanted to, as you're kind of getting framed up for what Kelsey and Nick are going to share with you, I wanted to give you a little bit of a perspective of where we think are some great growth opportunities. And one of the big things that we find is that, wellness is one of those areas where we think that there's a lot of opportunity because the pandemic, it accelerated a lot of trends, but really these were trends that were occurring where we're finding that consumers are looking at wellness from everything from how do I care about things kind of immediately and urgent and specific ailments that I'm struggling with and dealing with, to as you kind of go down this hierarchy, you get a little bit broader in terms of expanding what you're thinking about wellness. And it becomes not just about things like diabetes or heart disease, but this view of mental health and digestive health and metabolic health. As consumers kind of keep going down that pyramid, it becomes a little more futuristic. How do I think about my long-term health evolving? How do I think about kind of the fun, new, and innovative areas? And then finally, and I think that the area that we really love to see, I guess, from a Nielsen IQ perspective, and it's how we've really built out our total wellness is, we've identified that consumers aren't just thinking about their wellness as it relates to themselves. It's also really become around the health of the planet and the health of each other, making sure that wellness is equitable for everyone. So with that, before I turn it over to Nick and Kelsey, I just wanted to share with you of these kind of buckets and of these pillars. If you look at what Nick is going to share and you're thinking, well, where do I start? Here's some of the immediate areas where we would say there's some great opportunities to kind of lean in. So one, we know more important than ever, product formulation. So things around, because of diabetes, because of heart disease, because of obesity, and frankly, not just in our country, but kind of globally, paying attention to formulations around sugars, added sugars, types of sugars, carbs, sodium, critical now. We anticipate that becoming even more critical. The second area of self-care, this idea of food as medicine. So leveraging these need states differently. Like I mentioned, mental health, digestive health, metabolic health, the growth of these sorts of evolving views of wellness we think will grow. And we think, especially for you emerging brands, there's some cool opportunities around the idea that there's been a blurring of lines. So, beauty and food are kind of starting to come together, and we're seeing new interesting things, kind of a intel inside, which we think is some interesting opportunities. As you think about preventative and you think about where consumers are control, clean label. So this is areas around, no artificial colors, no artificial ingredients, plant-based, a focus, quite frankly, on healthy aging. We've been doing a lot of work here at Nielsen IQ on this. By 2060, over 40% of the US population is going to be over the age of 50. So these boomers, they're living longer, they're not retiring, they're living till 90s, and they're redefining categories. And we think there's a lot of great opportunity for brands as they kind of think about, what does that look like? I think as an industry, a lot of times we're so focused on those Zoomers or the younger generation, but I think we've got a great opportunity with these older generation as well. The next area is kind of, how do you look at some of the functional ingredients? Because what we've seen a lot from a consumer perspective is it's a lot of deleting, right? What am I not eating for health? what am I adding in? And in specifically some of the areas that they're adding, it really is around specific superfoods or adaptogens, where consumers are just so much more sophisticated in what they're looking for, and they understand not just this, is this a cool and trendy ingredient, but why am I bringing it in, and why do I care about things like whether it's CBD or ashwagandha or collagen or reishi, you know, like either really understanding the why behind that. And then the final area that we think that, you know, is an important area and a kind of a growth area for you to look at, where do you fall, what's your opportunity, is really sustainability, regeneration, but also this idea of social impact, you know, and that is everything from how diverse is your client base, and Nick is going to talk to you about how do you kind of think differently about your consumer and your client base, to, you know, what are you doing in terms of how are you treating everyone along your supply chain, because consumers are becoming much more interested in that level of transparency. And then also, you know, things like your, you know, just overall diversity, equity, and inclusion efforts. So these are, you know, again, if you're just thinking after you're looking at what Kelsey and Nick are looking at, these are some of the big macro trends that we think are some opportunities for you as you're going into our investor meetings to really identify where do we fall and how do we play. And so with that, I'm going to turn it over to Nick from WhipStitch to really get in and dig into the data.
Thank you, Sherry. Am I flipping here?
Nope, I'll flip for you.
Okay, thanks. Thanks so much. So in WhipStitch, one of the things that we spend a lot of time doing in, you know, raising money for clients or positioning them to sell is taking a look at those 5-year projections and trying to figure out the way to make them as credible as possible. And that means taking a look at a brand and at a granular level, figuring out, practically speaking, how large can that brand be, and what would a brand have to do to be larger from a data perspective, or what can you kind of, you know, prove out in data. So to kind of lay a little bit of groundwork for the discussion, you know, when we look at brands that are kind of higher net revenue multiples, this is when a brand sells, you know, what kind of multiple are they going to get on revenue? Kind of some commonalities here are, you know, from a brand positioning standpoint, it's a more narrow product base. So big strategics have brand managers or category managers that, you know, are fairly narrow in scope. So if you're in produce and frozen and snacks, that's probably 3 brand managers. And it's not as attractive if you're 200 million in revenue spread over 3 versus just under 1. Brands that are aligned with key consumer trends, obviously more valuable. From a historical perspective, you know, big companies have a growth problem, they don't have a size problem. So the more growth that you can provide, the more value you're going to be. That means multi-channel success, and that means the underlying growth coming from velocity. We're going to talk a lot about that and how you can use data to substantiate it. And then from a growth runway standpoint, a larger total addressable market, and then an obvious path to getting more ACV and more SKUs per door. From operations, it's kind of long-term thinking. Big companies, they want big brands, and that means they want permanent brands. They want brands that are going to stand the test of time. We took a sampling at one point of 20 of the largest brands that were out there in data, and we found 85% of them started between 1850 and 1970. That's what they want. They want brands that 100 years from now are still going to be on the shelves and be very material to them. And then from a financial profile, gross margin is, you know, very category dependent. 40% is a great, you know, middle of the road number. It varies depending on where you are. A path to a 20% EBITDA margin, and then capital efficiency. And that is really how much capital did you spend in the last year to get the revenue gain that you got. Forget about the past, because you know, strategies change. You're totally allowed to put things in the market and have them not work. But what did you spend in the last year for your revenue gain? Slide, please. So thinking about data components, starting with just sell-through data, this is the syndicated, you know, velocity data of kind of, or the syndicated data of what sells through in store shelves. You have dollars at the top of the stack, and to get to dollars, it's units and price. Units is basically broken down into distribution, or essentially kind of what, you know, kind of where is it in the channel, how much, and then what's the velocity. So how many doors and how much is selling through each door. And there are a few acronyms here that are pretty common that you'll hear. One is ACV. And ACV means all commodity volume. That's essentially what percentage of a channel are you in on a volume weighted basis. So if you're in one Walmart, it's probably about 1.7 or 8 times the ACV of one Kroger. And that's just because Walmart moves that much more food. A TDP is essentially one SKU in 1% ACV. So that means you have one SKU in, call it 225 or 30 or something like that Kroger's, or maybe it's 160 Walmarts. these are really important acronyms that I put out there. Dollars per TDP is the velocity measure that people use on the channel level. That basically is the same thing as units per SKU per door per week expressed differently. So you can think of those two things as analogous. And then some other important data attributes. What is the universe that you're looking at? XAOC is very common. You can add pet liquor, and then obviously there's omni sales, which is everything, all available here at Nielsen IQ. What time period are you looking at, a quad by quad trend, or are you looking at aggregates of years? And we also take a look at also how much promo spend is being done to look at changes in velocity year over year. Next slide, please. Panel data is very complementary to sell-through data. So sell-through data is what's going through the shelf now. Panel data is all about who's buying it, what are those demographics, how loyal are they? And loyalty is really important because if you look at a grocery store category manager, there's kind of two key metrics. One is, what are the dollars per inch or dollars per foot on the shelf that they achieve? And then the other is making sure that they have the most high loyalty brands in a category, because you don't want to lose a whole basket to try to squeeze another penny per inch out of your shelf, because that's a very big loss for the grocery store. So loyalty is very important. And then switching. What are people leaving your brand for, and what are people coming to your brand from? You can get a lot of insight out of switching as far as where you're going to, introduce new SKUs or even extensions within a category. And then attributes. Is it sustainable? Is it, is it environmental? Is it low sugar? There's a whole universe of attributes, and being able to look at those attributes not only for what's in your products, but what's in other products, even outside of your category, and broadly speaking, and how are those attributes trending? These are all really valuable things you can get out of panel data, completely complementary to sell-through. Next slide, please. So how do you kind of use the data to enhance the valuation? So when we're looking at 5-year projections, the first thing, just kind of putting 6 things on paper here. One is the company on track for a growth versus a profitability strategy? So the growth strategy is you're going to get the brand as large as you can, and you may or may not be profitable when you sell, but you're probably going to be north of 100 million in revenue, and you're going to sell to a big strategic. And if you look at the last decade, the 2010 to 2020 decade, that was the dominant strategy. It was grow as fast as you can and then sell before the growth stops. And that could be even back then at 30 or 40 or 50 million revenue. If you look at deals like, Crave and Bark Thins and a lot of the, deals that happened, Food Should Taste Good in the mid part of the last decade, that was very much the strategy. In that strategy, sell-through data is much more important than panel data, because it's all about what is that kind of near-term growth and what is it going to be in the next year. And then profitability strategy is selling off of an EBITDA multiple. So getting to that 10 million of EBITDA or more. Near-term projections, obviously, if you're doing a 5-year projection set, that first year velocity number, and velocity is the key thing here, right? Velocity is basically if you can get it, it is the best form of growth possible, the most valuable. You get that velocity number in the next year projections by extrapolating off of what's going on today, looking at that kind of quad by quad over the last year, what's happened with promo, what's happened with your shelf gains, and extrapolating forward. But then when you start looking long-term, the panel data becomes really important. Why? Because those near-term projections, those near-term velocity trends end. And then it's things like, what's happening in your customer base? Are you a climate-friendly product? And are you appealing to climate-friendly youth who is going to be aging in and spending much more money than they're spending today in 5 years? What is going on? Are you part of a multicultural customer base which is expanding? So being able to show, or part of attributes that are on a secular trend. So being able to say, hey, in 5 years, our product gets 2% lift from this attribute and 3% from this piece of customer base. You can add those things together, and that's an underlying rising tide under your velocity. So that you can only get from panel data, and it's very important to substantiate what is that growth and velocity after year 1. When you're even at any stage in the company making brand decisions, do you have the headroom to be in the growth strategy, or should you be going more for profitability? Should you be expanding your category? How many SKUs can you get? All of these decisions are very important and come both out of sell-through and panel. And I'd say in the longer term, again, looking at those secular trends that come out of only panel data are really important. And then your marketing decisions and product offering are in the same boat. Slide, please. So one tool that we use to substantiate if a product can make it in another channel is to take a look at other analog products or kind of analog categories and look at what is the relative velocity between two channels. So if I look at conventional to natural, and I take a look at kombucha versus other probiotic drinks, you can see that the gray line versus the black line, the gray line is other probiotic drinks. And you can see that over time, there's a spread there. Other probiotic drinks are getting a higher ratio or a higher velocity proportionally in conventional to natural. So if you are one of those other probiotic drinks and people are kind of thinking about you in the context of that whole set, which is going to contain kombucha, which is a little bit flatter right now, it's really important that you have this data when you're talking to investors and say, hey, look, yes, kombucha may be a little bit flat right now, but take a look. These other drinks, there is a spread here. So this is something that is going to, in 4 or 5 years, have a much better ACV potential in this channel. Next slide, please. Rising tides, I've used this word before. So when you align with rising tides, you're basically getting free revenue or free velocity growth. So I've kind of bucketed these into 4 pillars. One is sustainability, one is diversity, and diversity is really this multicultural customer base we have that continues to grow, the diversification of our country, and then therefore more purchase decisions by more diverse customers. Consumer self-awareness, which is heavily mental health, but that mental health also comes with things like managing your macros, being self-aware around your blood sugar, to Sherry's point about diabetes, and then broadening customer base. What's going on with the category that you're in, or specifically the white space that you've found, and what are the customers that are kind of coming into that category, that white space? What's that potential? Is that broadening into lower income? Is it broadening into different age groups? That's a panel data question, but there's a lot of lift that happens there. And the benefits here on the left: better capital efficiency. You can get bought earlier because big strategics know you're going to get larger. Investors can have more confidence and be more aggressive on value, et cetera. Slide, please. So practically, one of the exercises that we go through on all of our brands that we're taking to market is a headroom analysis. So brand B would be the hypothetical client here. Brand A would be an analog that's already in the market, that's a better for you company, that's in a similar category or the category of brand B. And so you can take a look at brand A and you can say, how much ACV can they get in XAOC? How much can they get in natural? And then you know that you can't say that your company is going to get more than that, right? If you're independent and that company's been better funded and they're much further along, but you can use those numbers as a barometer for something you can get close to. Same with average items carried and same with velocity. And again, then you can go on the left here and you can say, here's our current sales. Here's our first category of product run, and based on this analysis, we can get another 46 million. Here's our second category of products. Based on this, we can get 15 in these 2 channels. We can add club, again, looking at analogs, e-commerce, away from home, restaurant, et cetera. And our brand headroom is 206 million. So when you're, even if you're 10 or 20 or 30 million, and you're standing in front of a large tech investor, it's really important to be able to show to them, hey, this brand can get to 150, 200 million. Here's how, and here's the data that supports this, because you're investing in the future of my brand. And that's just not where I get it in 5 years. That's where whoever buys it in 5 years gets it 5 years from then. Next slide, please. Some insights on sell-through data that are really important. These are some pitfalls that I see in projections a lot. Number one is there is an inverse relationship between velocity and distribution gains. So basically, when you increase your ACV, there is a linear relationship where velocity dilutes. The more ACV you add in a channel, the more you dilute your velocity. So, if you're projecting that you're going to go up 20% ACV, you probably have an underlying 10% flattening of velocity that you have to explain away when you're talking about those projections. Increasing your brand block is different. That is a near-term dilution when you essentially add more SKUs in the shelf in the same stores. But in the long term, within about 2 years after doing so, your velocity catches up when you actually look at the data, and it actually continues to grow. So that bigger brand block is like a marketing engine. People see it when they walk by, and then they buy your brand more and more. Number 3 is when you do that with your brand block, believe it or not, it's your top SKUs that get the lift. You'd think it would be everything, but it's really not. Making your brand block larger tends to actually lift your better SKUs when you actually do the analysis on different categories. And then lastly, every single category has a kind of cap on how much ACV you can get, and it's somewhat company specific and very category specific, but on average, it's about 40-ish% in XAOC. where you get to that level and you start to get velocity trail off. So you start to add the stores that just aren't as attractive, or don't have as much customer volume, or whatever it might be, and your incremental ACV starts to trail off. Next slide, please. Sherry talked a bit about inflation. One key thing here in data is knowing what is the inflation in your category. And I think one of the easiest ways to kind of just bound this is looking at what's the dollar density. So the inflation right now that we're seeing tends to come with lower dollar density categories. And I look at that as, what's your wholesale pallet cost? If you look at popcorn, water, tortilla chips, those are like $1,000 to $1,500 a pallet. You can see what the inflation numbers are there. When you look at VMS, fresh herbs, those are more like $10,000 to $50,000 a pallet, and you can see it's much lower inflation. Inflation is trucks and drivers right now. So when you're thinking about how much price increase can you have, know what's going on in your category before you say it. Next slide, please. So some of the rising tides. Low income. Low income is a great rising tide right now. This downturn, I won't call it a recession yet, this downturn is unique because low income people are actually getting greater wage growth than other income buckets. This, as you can see on the right, has not been the case in other downturns. And this is a function that this downturn, we are coming off of basically in a kind of overexuberance of economic growth in 21. We had 5.6% in 21. That's really just being averaged down to the more realistic 2.2 in the long term. So it's not as much a downturn, but an unwinding of that stimulus. Next slide, please. Low income, here's the data that shows, if you look at the different income buckets in the Nielsen IQ panel, you can see that on total sustainability on the left as an attribute, low income grew much more than high in the last 2 years. And then on the right, you can see by NPI, same thing. So both in wellness and in sustainability, you're seeing that low income outperforming. And again, this is all about what are the rising tides? What's that revenue growth in your later years? Big companies have a growth problem, not a size problem. So even if those numbers are smaller today, it's the growth that counts. Next slide, please. This is a more broader perspective here. This is actually the incremental low income growth above and beyond high income more broadly across sustainability. So you can see it's about 3% different over 3 years. This is a 3-year window too. Even things like organic are about 18%. Next slide. On sustainability, I'd mentioned before about the kind of climate-friendly youth. We were going through a tremendous amount of data before the Expo East State of Natural presentation. There was this repeating pattern of the low usage households over-indexing in weird ways. And it dawned on me one day that if low usage households over-index, the only way it's possible is if more households buy. Because if the households that are there buy more, they get kicked up to the medium usage. So when you take the panel, they cut it literally into low, medium, and high usage. It's a very good tool because if low usage over-indexes, that means that it has to be more household penetration. And that was the case here. When we look at age and all environmental as a sustainability attribute, you can see the 18 to 24-year-olds. These are people that are, some of them don't even have income. They're in college, or they're in starting jobs where they're not making that much. There's 55% household penetration in the low usage there compared to 28% in 45 to 54. That group in 5 or 10 years is going to have families. They're going to be making much more money than they're making today. That is an enormous kind of lift within sustainability. And you can see the trend. The younger the consumer, the more climate friendly, the more values-based they're buying on environmental. Next slide, please. Multicultural is an equally important thing. It's really important to know what is the percent white and percent, everything else in your customer base. Right now, what we did an analysis, the Nielsen IQ, we took a look at all of the big brands of the top 20 CPGs and averaged out their customer base. And we figured out it was about 68% white in the panel. The US population is 58. Again, a lot of these brands started between 1850 and 1970 when our population base was 90% white. So then what we did is we also took a look at the key CPG, some kind of 20 randomly selected key CPG brands, and we came up with an average of about 64% white. Then we took a look at what happens when you look at the brands or the companies that on average are less than 68% or have a more multicultural customer base compared to the ones that have more. And of the independent companies, the ones that were less had 13% more growth per year than the ones that were more white. In the big CPGs, it was about 4% difference. Again, the brands are so much bigger, the numbers are more concentrated. But the lesson here is the more multicultural a customer base, and this is a linear relationship too, the more you can hire the diversity of thought to access it, the more growth you're going to have. And that also means a bigger brand headroom. Next slide, please. This slide I like because this actually shows over the next 40 years what our population change is going to look like. And so you can see if you can target that broadly multicultural customer base, that is where that rising tide of population growth is. That's where that average number of consumers that your addressable market is really growing and white is shrinking. Next slide. And now I pass it back to you, Kelsey.
Okay, thanks, Nick. So I'm going to take it from here and just share a little bit, expand upon what Nick just said, and share very tactically how you can take some of the concepts that Nick was sharing and go through some specific examples of what to do next. Next slide, Sherry. So first, some things to think about, right, that were shared. As you begin to think about your next investor meeting, do you know who your customer is? Do you know how inflation is impacting your category? Do you know the relationship today between your velocity and distribution? And lastly, how are you measuring the headroom and how is that grounded in fact? I'm going to go through each of these specifically, give you some examples of things to think about and how you can quantify them with data, just like Nick was sharing. Next slide. The first one is going through looking at who your consumer is. So as Nick mentioned on the rising tides, we know if you're appealing to a growing demographic and customer base, that will in the end help to grow your brand naturally, right, as those demographics grow over time. For each of these examples, I'm going to be walking through a live example of a report or a data set that was pulled and telling you a little bit about what it shows, right, and what that's going to glean in terms of the insight. So this is an example of a shopper snapshot story that's directly from one of our automated presentation tools. And this looks at the demographics for a brand that we're going to be walking through as the example here versus the category overall. And what it's telling us is the shoppers for this brand are more likely to be Asian or Hispanic, and they're more likely to be young and have a multi-person household, meaning they're young families. So thinking about the natural headroom this brand could experience, right? We know that the Asian and Hispanic customer base is continuing to grow over time, especially Hispanic, and that those young purchasers, they're only going to have more purchasing power over time, and that is again going to help to inflate sales and grow that velocity naturally without investing big amounts into marketing efforts. Next slide. So the second example is looking at the inflation. This is a very hot topic today. I get asked about all of the time. And looking at two specific examples, so a market performance, which is one of the templated reports, in addition to just pulling an extract of data and looking at a trend line. So on the top table there, you'll see for the different regions, the product or the brand of focus and their price increases over the last year versus the category. So this brand has had minimal price increases. However, the category is increasing rapidly. This is in a cookie snacking group. So as Nick mentioned, right, those products that come in the bigger pallets that have lower value for each pallet, like snacking type categories, are experiencing higher inflation because of the increases in prices of distribution and supply chain. So this brand definitely is lagging behind some of those price increases, which could mean there could be opportunity to increase price or follow up, right, with getting a better margin. On the bottom there, it also is just showing another view of this, looking at a trend over the last year versus looking at the year-over-year data. same thing is true, right? This brand has been lagging all year behind the inflation that the category is experiencing, and that inflation has only been picking up in the most recent quarter. So the third example that we're going to look at is the category and brand trend and how the distribution and velocity are comparing to one another. This report, as we get to the end, is actually included in our free subscription. So if you aren't purchasing data today and are interested in getting some free reports, this is an example of one of the reports that you can actually access for free. So there you'll see a snapshot on the left there of the actual report. It's really small, so let me just highlight a couple points. This brand is growing in distribution, but velocity versus last year is down 9%. As Nick mentioned, that is to be expected. So, right, that's something that this brand needs to factor in when assessing their headroom of if their brand continues in distribution and they are really low in terms of their share of distribution so far. So they have a long lead way to get to that 40% ACV where their velocity starts to cap off, but they need to factor in that about 9% loss that they're already experiencing as they grow distribution. And the bottom table on the report there gives the week by week synopsis, which I blew up into a chart so you can see that in more detail. The blue line showing their pretty rapid increase in distribution, which is great to see. And they are on a pretty flat throughout the year trend in velocity. So while they're down a little bit versus last year in velocity, moving positively, right, as they're moving throughout the year in distribution. So another important thing to highlight there. And then lastly, just kind of pulling some of the other headroom pieces together that Nick was mentioning. So distribution, where can you increase your sales? So we have reports that look specifically at the retailers, how the category is performing for the retailer today, and then allowing you to quantify your opportunity. In the market opportunity report, it quantifies it for you based on your current velocity and distribution rates at other retailers. So you can start to see, okay, if I'm in 3 retailers today and I'm going to expand to 5 in the next year and then hopefully 10, right? What does that increase in sales look like over the next near-term performance? E-commerce is another one as well. So a lot of brands today are starting online first, but not everyone. And so if you're thinking about what is my potential online as well, looking at your competitors and what they're doing from an online sales velocity can really help set some expectations for how should you quantify that, what could your potential be online as well, to add that as another trade in addition to brick and mortar stores to help you quantify that total headroom. And then last on here, the competitors and what they're doing. So one of the things Nick talked about is new, kind of new white space, right, in terms of your brand. And, you know, looking at your competitors can help set expectations for your velocity, your total distribution that you can accomplish, but also looking at what are other areas you can expand into where your consumers are already purchasing. One of the easiest ways is to look at, you know, your customer base today and say, what other needs of that customer can I meet through category extensions or moving into new categories. And so looking at your competitors, some of the categories that they're in and how they're performing in those other categories, in addition to something like a cross-purchase analysis where you're looking at your shoppers and what else they're purchasing, will give you some really good insights into what the total opportunity could be for those new expanded spaces. You can go to the next slide. So that was kind of a really quick run through, right? Some of these core examples of the ways that you can look at these new revenue streams, both looking at the rising tide of how can you look at your customer base, what you're doing today, and already know inherently where you're going, but also looking at your headroom from either an untapped customer potential, category potential, or just true expansion in distribution and velocity. The Nielsen IQ Buyer platform is specifically built for emerging brands. That is where I grabbed all of this data and the report snapshots from, and we really want to make it accessible for you to get access to this data for your next investor meeting or retailer meeting. And that means we give you access to more data than you may have had access to in the past. So always having weekly updates. It includes both RMS and panel for 3 years. You get the retailer level visibility, so you can quantify, right, those new opportunities. It also includes UPC level data for you and your competitors. So this transparency in the data really gives you the opportunity to quantify all the things that we've been talking about throughout this presentation. And then I mentioned the free reports, but if you don't have access to data today or are only looking at data on an ad hoc basis, you can access 3 free reports that give you a high level view of your brand, the category, and up to 10 competitors. So with that, we can move to Q&A. There's the QR code to sign up for the free reports, but please put your questions in the chat and we can follow up by answering those.
Thanks, guys. Great job. So we do have a few questions in the chat. Some of them are more simple, so I'll go ahead and answer them. Yes, everybody, the session is being recorded and it will be sent out to everyone via email after the completion of the event. Okay, so now that we got that out of the way, the next question is, this one's for Nick. If I'm a new brand just starting to get distribution, are there any recommendations on what they should focus on with investors?
Great question. And I think obviously there's all the things related to, kind of brand and category, but I think that when you're very early on, whatever you've been able to prove out from a channel perspective is really important. So you may be only in whatever, 200 natural stores, but that may be enough ACV that you've got enough data to be able to show that you can effectively have a promotion and have an uptick in velocity in your baseline after the promotion from before. And that one piece of information is very validating, right? Because the ability to connect with the customer through a promotion to successfully, economically deploy those promo dollars that get a sustainable lift is very valuable. And that can carry over into conventional. Yes, you have to prove that out again, but just knowing that you can do it as well. The other thing is the headroom. It's taking a look at what is your vision, right? You as an entrepreneur know the white space and the opportunity for your product better than anybody else. And so how can you communicate that, kind of on paper in your vision? And then how can you do it looking at the data to say, okay, based on what's out there, this product can be whatever, 10 million in natural, 15 conventional. If you're $1,000 a week in 500 Costco's, that's roughly, 23 or 4 million a year. You know what I mean? Like adding those up just to be able to show that it's there. And if it's a smaller number, also saying, hey, if we're in frozen, there's lots of companies like, Dr. Prager's and Amy's and all these companies that get into 8 subcategories within frozen, right? So because I'm going into that category, I have this unique ability to be able to fill a door, which you can't really do in beverage as easily. So again, it's kind of very category dependent. It's a lot of things, but validation and vision, with a data component behind it.
Perfect. Thanks, Nick. So the next question is for Sherry. How do I learn more about food as medicine trends?
So we've got a lot. We publish a lot of information. So first thing I would say is if you want to go to niq.com/wellness, we've got a lot of content there. You can also ping me directly on LinkedIn, and I can share with you. We've done a lot of different presentations this past year on some of the big things that we're seeing around food as medicine. Just some highlights. I mean, we're really seeing, obviously, the last couple of years, this growth in immunity. It used to be that that was just really only in the supplement side, but we're definitely seeing it really grow from a food perspective. Same as I mentioned earlier, digestive health, mental health, all of those are kind of like these really emerging and up and coming areas that we're seeing from a food perspective. But yeah, ping me directly on LinkedIn and I'll share with you some of our past content on that.
Okay, perfect. Thanks, Sherry. So that's all that we have so far, but we do still have a little bit of time. So if any of the attendees would like to come off mute and ask their questions, we do want to give everyone the opportunity to get their questions answered.
While we're waiting for any questions to come in, I think, Nick, one of the most interesting things that you talked about, I mean, you talked about so many interesting things, but I think it's so important, that idea that, like there's not just this straight line growth, right? That it really is important that like to get from X to Y to Z on ACV, you really, there's a kind of a gap. And so I think that's a big part when you were talking about kind of those 4 pillars of where there's sometimes mistakes made on assumptions. I think that was pretty powerful for a lot of the brands to understand how they can kind of like think about data in a different way. So thanks for sharing that specifically.
No, thanks. And when I look at how a brand's velocity has evolved year over year, I take a look at what is the actual percentage change, and then I look at the category. And so if a brand is up 10%, but if the category is up 5%, particularly if I look at a subset of better for you brands as closer, then I kind of net that off. So the brand is kind of ahead 5%. But then if the brand has gained 10% ACV, you kind of add a few percentage points back, right? And if they've cut their promo as a percentage of total dollars, you can yet add even more. You know what I mean? So I think all of these things kind of flow together, and just looking at your velocity performance in a vacuum, I think is a real mistake that that people make, and tends to undercut it.
Okay, perfect. We do have another question. It's about, will the presentation be emailed as well? Yes, you guys will receive the link to the presentation as well as the link to the recording.
Well, great. Well, Ayana, if there's no more questions, and I think Nick and Kelsey, like myself, are open, that if people want to reach out to us directly on LinkedIn, feel free to do that. But I think this is part of an ongoing series from a Nielsen IQ perspective, where we want to really help emerging brands with some of those. And you can see kind of the big picture all the way to like, how do you get your hands in the data today, and what do you do? We really want to make sure that we're, helping, support the industry from that perspective. So, Ayana, I think if the folks that were on this webinar will get the invite for our next one. So look forward to more stuff coming from us. And Kelsey and Nick, thank you so much for joining me.
Thank
Thanks,
you.
everyone.